Good morning, everybody, and a warm welcome to Street Signs. Well, let's get straight to the heart of the market action this morning, and that is the European banks. We're seeing a steep sell-off across all of the European lenders. All of this on the back of big news out of Silicon Valley Bank yesterday. Major difficulties at this tech-focused bank sparking fears around what risks may lie beneath the surface for lenders across the globe. Let's take a look at the U.S. banking action. You can see the banks in Europe down about 4.5% overall. And in terms of the action we've seen stateside, you've got here a look at SVB Financial. This is the Silicon Valley Bank. This is a Frankfurt trade this morning down about 16%. Yesterday we saw a massive sell-off in the bank. But what was more worrying for the investment community was the sell-off that we saw across Wall Street's banks. Wall Street's four biggest lenders lost over $50 billion in market cap amid a crisis of confidence after investors dumped holdings of this bank's parent company, SVB. Shares in the bank ended the day more than 60% lower after it announced a fundraising plan and sold the majority of its available for sale securities amid a run on client deposits. Now, that route continued after the market closed as VC firms lined up to tell clients to get their money out, with founder funds Peter Thiel among them, according to Bloomberg. Now, to just recap, I mean, there was a taste of what happened, but just to recap in simple language what happened with SVB. Essentially, Silicon Valley Bank's core customers are tech startups. They deposited heaps of money with the bank from VCs. SVB then invested a lot of those deposits into long-term government securities. So essentially that gave them double sensitivity to higher interest rates. And so when rates rose, it created a big profitability problem, which ultimately forced them to sell $21 billion of bonds to reshape its balance sheet. But they had to log some significant losses when they sold those securities. So ultimately, they had to then raise capital to replace the losses made in those sales. And that brings us to today, when investors are asking the question, will other banks be forced to sell some of their securities at a loss to cover deposit withdrawals? Now let's take a look at the broader U.S. market. We've got red across the board for the majors yesterday. The Dow Jones dropping 1.7%, the S&P dropping about 1.9%, and the tech-heavy NASDAQ falling about 2%. So it was a really tough day stateside. As for the week-to-date moves, just to put it into perspective, we are significantly lower for the week overall coming into today's session, more than 3% worth of losses for all of the major indices.